Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil futures. This is my daily chart for ICE Brent crude oil futures, and I appreciate it can be quite hard to read, but it is useful to me. However, I can see it can be quite confusing to anyone not used to it. So I have drafted a simplified version to help ease the explanation of what is going on. There. Here it is, and we can see the market has moved significantly higher yet again with a bullish opening white Mariposa and second bullish white soldier yesterday after the previous session's indecisive doji cross. The market utilized the support provided by the combination of the 38.2% absolute Fibonacci line at 91.11 and the more recent 38.2% Fibonacci line in April to late June move at 91.64 to try higher up to test and halt under the slowly rising mauve medium moving average. That's currently at 95.37. We next have overhead the 50% Fibonacci line of the April to late June move at 98.28, along with some stratified congestion areas, really only seen on that more complicated daily chart. But they're between 97.68 to 99.61, 101.55 to 103.34, and at 106.79 and between 106.79 to 108.62. This move higher now retires the targets X at 67.99 and X1 down at 53 even. The irregular double top that set up those opportunities below is no longer valid, as we now have a June to July based V bottom running the immediate show. This move higher now affects the bigger picture. You see, as I have mentioned so many times before, from March through to mid-June, the market had been caught approximately between two necklines. The overhead dark blue neckline of the July to November 2023 head and shoulders top, currently at 118.86, and the bright red neckline now below of the September to November 2024 head and shoulders top, currently at 89.08. This is quite a wide band, but it did set up the opportunity for what looked like one huge topping action. However, this week's move higher back within this very wide band has put that aside for the moment. And we are now concentrating on the move higher from the recent V bottom. This move higher now seems to be within a green bull channel, currently 89.92 to 98.99. This seems to work for now, but it is quite steep, so I'd likely expect some tempering. And it also is only a 3-pointer right now, rather than a hoped-for 5-pointer. So far today, well, we have seen prices try significantly higher, up all the way to the 50% Fibonacci line at 98.28, which is being challenged right now, and just short of the bright green upper bull channel line. Or not even, bright green upper bull channel line. Beyond this, the next resistance, bar the previously mentioned congestion area, is the bright pink middle time, which is currently at 101.36. Or perhaps the next significant pattern here, which is the mid-December 25 to early July 26 bullish shift pitchfork. Spot gold. A second consecutive bullish opening white Mariposa yesterday, and a confirmation of the break above the recent mid-May to date downtrend, currently at 40.08, which had capped prices and driven the market lower in recent times. However, the top side was capped by some recent coincident Fibonacci lines. This is yesterday's high. It was capped by some recent coincident Fibonacci lines at 41.61, with just beyond that the declining green short medium moving average, currently 42.71. And that one's coming down to meet the market. Looking below, we still have the bright red middle time, currently at 39.83 of the main pattern here, one made at the start of this year. The bright red, big, late January to late February bearish shift pitch hook, with the market still hugging or close in on the bright red declining middle time. This bright red bearish shift pitch hook has been a pretty good showrunner for the market here since its inception and continues to do so today. Now, so far today, a reactionary move back down from the overhead combined Fibonacci lines at 41.61, those still within yesterday's range. Bitcoin. An immediate countering bearish dark cloud cover pattern yesterday after the previous session's bullish opening white Mariposa. The top of the market was capped by the October 2021 high, which was also the mid-June this year high area, whilst below we have support at 64.929 and then the very significant 50% absolute Fibonacci line at 63.129. Further afield, we have dipping in overhead the green short medium moving average, currently at 69.301, close to the November 2021 high at 68.977. Whilst below, we have the old January-based Head & Shoulders neckline extension, currently at 59.728, which I think is of limited value right now, followed by the late June low at 57.47, which is near the seemingly significant Fibonacci support at 57.870. So far today, a small follow-on lower, moving towards but not yet reaching support below at 64.929. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Toftbeck and ADM Investor Services International Limited. And here comes the final important bit.